Happy Friday, traders. Okay, so we are ending the week in markets with a little bit of action. Obviously, we had some very important economic data out of the US last night, which was the non-farm payrolls report, the employment data. But before we got that data, we got the private payrolls numbers, the ADP report the day before on the Wednesday. Now that data was abysmal. Your market was expecting there for that ADP to come out around about 99,000. It came out negative, minus 33,000, and that was the worst number for ADP for over a few years. So market was going into that number, the payrolls number, last night, thinking that this number could be a very weak number. Market was expecting last night for that payrolls number to come out at around about 110,000 for the headline, and the unemployment rate to go from 4.2% to 4.3%. Now the headline came out 144,000, and the unemployment rate, instead of going up to 4.3, actually went from 4.2 to 4.1%. So we had a beat on the headline and a beat on the unemployment rate, and that was totally unexpected because, as I was prefacing this, that market was expecting a weak payrolls number. So that did not happen. Payrolls once again beat expectations. So it still shows that the US employment market is solid. So what does that mean for markets? First thing it means is that you can forget about any chance of a July rate cut by the Fed. Market was starting to price in that potentially that meeting could be live, potentially a 20% chance. That now is nil. There's no chance that Powell now is vindicated for still being on the sidelines and pausing on rate cuts because the labour market certainly does not need a rate cut for the time being. And even markets started pricing the September, there's no meeting in August, but September, previously there was about 30 basis points priced in for that meeting. That has now fallen to 20 basis points, so not even a full rate cut now for potentially September. So that's what this strong data has done for Fed policy expectations anyway. Immediate market reaction, equities, which have been at record highs. Obviously, this data is positive, that the economy is still okay, so equities do what equities do. It kept going higher, S&P and NASDAQ up 1%. Previously, we were talking about how S&P targets for July could be as high as 6,400 because July is a seasonally a very positive month for equities, and generally S&P is up 3.5% for July. And S&P is already on its way to almost 6,300. So 6,400, and this is just in the first few days of July. 6,400 certainly seems like a realistic potential target. For the US dollar, the market was going into the payrolls very much short USD. We've seen the US dollar trade down to 3-year lows this week. So we did see some unwind of this very heavy positioning in the US dollar. The biggest move was in dollar yen. Dollar yen has the basically the highest beta to changes in the basic payrolls numbers. Has a high sensitivity. It was trading sub 144, jumped up straight away 100 points up towards 145, where it is pretty much now. And obviously euro, which has been trying to trade above 118, has been knocked back below that as well. So I'd imagine at the moment, just on the back of until the dust settles, I don't think we're going to see much US dollar selling at the moment, and probably more a dollar bid for the time being anyway. As far as the commodity space, gold, yes, that was trading up around that 33.60 area before the number. Was having a very strong week, and that, yes, has been knocked down about $40. So I'd imagine, one of the things is that US bond yields, it's also has created that sell-off in the dollar overnight. We saw US 2-year yields and 10-year yields up about 10 basis points plus on both. So US 2 yields up around about 3.9% and 10 years at 4.3%. If those yields continue higher, that will also weigh on gold. So I don't see a big trade in the short term. Long gold, I think, and I've been saying this for a while, that resistance around that 33.50 plus up towards 3400 is going to be very tough for gold to get through. So bias at the moment potentially, be short gold back down towards that 3300 or even lower again. Besides payrolls, we did see some other news overnight. Scott Bessent, the Treasury Secretary, basically said that when the tariff delays happens on the 9th of July, which is mid-next week, when that finishes, that probably about 100 countries will have the baseline tariff of 10% next week. So look, it doesn't sound like a hell of a lot, but at the end of the day, most of those countries had tariffs probably at zero before that. So we are going to see some tariff action on a lot of countries next week. So what does that all mean for inflation? I guess we're going to have to find out in in the next couple of months when we start seeing some of that tariff effect, and maybe potentially we might see bond yields higher again on those tariff numbers mid next week. And then also just finally, one of the big things is the big beautiful bill of Trump that's passing through at the moment. Hopes to sign tonight as part of the 4th of July US holiday celebrations. That obviously is going to add to a lot of US debt. US debt is at record levels. There's talk that this bill could even take US debt towards $40 trillion by the end of the year. So again, going to be very interesting to see how the bond market reacts to this next week. If we do see bond yields continue higher, that is going to influence a lot of markets, obviously US dollar bid, and also potentially at some stage, depending on how big the spike is, those equity markets which have been a one-way street, it may potentially cap equities. But anyway, yes, bond market will be something to watch next week. It is a holiday in the US tonight with the July the 4th, so I'd imagine there's no key event risk or data, so the market probably will trade quiet into the weekend. So good luck with your trades, and we'll catch back in with you next week.